Why pay more for your precious metals from the big guys with offices on Wall Street and who bank with JP Morgan? Get your fizz from the doc at sdbullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Well, Eric, it's been a bit of a correction this week here in gold and silver, both down moderately thus far. We're recording this week here on Thursday night after the markets have closed. Most of the losses netted out for the week really on Thursday today, with gold down about $25 on Thursday and silver down about a quarter. Off of last week's close, around $1,400 for gold. Both metals are down a little bit. Could see some movement tomorrow with the jobs report, but you're not looking for quite as much movement as sometimes we see in the jobs report. Is that right, Eric?
Yeah, that's the way it looks, because consensus is calling for 175,000 jobs being created in the month of August as the initial report. ADP reported earlier today that they saw 176,000. And their numbers tend to come pretty close to wherever the government is reporting. So odds are tomorrow is not going to see any major upside or downside surprise when it comes to those numbers. And basically considering all of the trading that we've seen so far this week in precious metals to the downside, and more detail that we'll get into later in the program. But it looks like tomorrow probably will not be like the typical non-farm payrolls report day where the cartel comes in and does their smashing, as they are very often prone to do. I mean, historically, if you look over the last decade, that's been a day where, some 80% of the time, give or take, the cartel will in fact paint the tape. But remains to be seen. But we've seen a lot of damage already, and physical markets are still reasonably tight. And GOFO went negative again today. It had slipped into the positive territory on September 2nd, but now it's back down slightly negative for the 30-day rate. All the while, prices coming down in gold, which would, theoretically say, well, supposedly that's representative of gold being made available in the marketplace because people are selling it, right? Well, then why is GOFO going back into the negative? And that it continues to reflect that the actual physical market, as opposed to the paper trading market, it remains tight.
It definitely remains tight, and that's a story that's largely gone overlooked this week with all the news focus on Syria, as GOFO, after 8, nearly 9 weeks, did turn positive, but like Eric just pointed out, slipped right back negative on the 30-day here while prices were declining. So Asia, Russia, China, India are happy.
Middle East,
they're all happy to grab up that bullion. Talking about the physical side here, the retail side in the U.S., the big news we had Thursday was the U.S. Mint Silver Eagle sales have now already surpassed 2012 sales totals through like the first day or two of September, which is basically August sales. So for the first 8 months of the year, the Silver Eagle sales are now 33.75 million, surpassing all of 2012. And it won't be long, well before December hits, that we should take out the all-time record sales record in 2011. Overall, very strong physical sales continue. However, the premiums are continuing to ease up a bit, and the supply is becoming more and more available. We talked on last week's show that 90% was becoming available live in stock for the first time in months at some of the larger U.S. wholesalers, and that trend continued this week here. We now have 3 or 4 of the largest U.S. wholesalers that have supply in stock, and for the first time in, I think, 6 or 7 months, it's been definitely since the Cyprus incident, we have 90% that is back down below the price of the newly minted mint coins, like the Silver Maple and the Silver Eagle. So 90% is now available cheaper or less expensive and a premium than the new mint coins for the first time in months, and we've seen a big pickup in demand with that occurring at SD Bullion here this week. We've had quite a bit of demand, and really across the board, premiums have settled back down just about to where they were, say, last October, November, December. We were selling Eagles. We've We had a sale this week at SD Bullion, 249 over spot. I think selling them 259 right now, which is just about right, exactly where we had them last fall. Silver maples are even lower. We've been selling them for 199, 209 over. So maples, the suppliers are just about back to the pre-shortage levels on a premium side for the main silver products here in the U.S. So while the demand for the year has been strong, the shortage has been easing, and we've definitely seen signs of that. 100-ounce bars are still in somewhat of a short supply with the Johnson Matthey and the Engelhard bars. Engelhard bars are still pretty much out of stock across all the wholesalers, but one or two are starting to get a few of the Johnson Matthey bars in stock. So this seems to be the trend continuing, that the supply is improving somewhat across the U.S. space for physical silver, but that's really with what we've seen with the price kind of easing off. 24.50 as the highs recently here. It'll be interesting to see what the supply levels look like once silver gets moving again, and if indeed and when it does break up pass through 25 and head towards 30 again.
And probably the second big story that'll be impacting metals over the course of this coming month is just what's going to happen with the FOMC meeting and whether or not the Fed will taper. Doc and I were talking about this prior to jumping on the air, and our basic view is pretty much in agreement that it's a pretty high probability that the Fed, due to its need to maintain credibility, will probably do something, on the order of maybe a $10 billion cut, most likely to the Treasury purchases as opposed to mortgage-backed securities, because apparently the consensus amongst the economists, and this was easily seen in the speeches at Jackson Hole, that the mortgage-backed securities program, in their perception, has been more effective than the Treasury purchase program. This is clearly something that is more show than anything else, because as we saw and reported back, I believe it was last show, I'm not sure if it was last show or the show before, but in any event, July's numbers for the net sales of Treasury long bonds by foreigners were 40 billion, which is the highest number it has been in probably, I can't remember any time in the recent past when it had been anywhere close to that over the last 10 years. And China and Japan represented 40 billion of their own net sales, so it just so happened to coincidentally match what the net figures were. And that boils down to a basic problem that the Treasury and the Fed have, and that's that, as they speak of tapering, which will reduce the amount that the Federal Reserve purchases, the role of the Fed as the buyer of last resort when it comes to our Treasury and the financing of our deficit is emasculated. They have less power to be able to go out and buy. So that means higher interest rates. And the only reason why the Fed feels like it has to put on this kabuki theater about tapering is because they want to maintain their credibility with bond vigilantes who can conceivably raise their inflation expectations, which would push up interest rates. So it's this contradictory kind of, no-win game that Bernanke finds himself in, and that's, as we have talked about for many months now, the main reason why he's probably wanting to ditch town and dump his job, because at some point this is all going to end very badly, and it's going to end up with higher interest rates across the board, slower economic activity, and then the need for the Fed to kind of reverse this temporary game of kabuki theater when it comes to tapering, and they will probably institute some long-term program of buying the long bond or the 10-year to 5-year portion of the yield curve. And that, in the long run, is going to be supremely bullish for precious metals, because people will realize that it's an indefinite green light for the printing press, so to speak. Short term, we have this risk coming up in the next 3 weeks as all of these things are priced in and the Fed gets ready to speak for its next meeting, which also corresponds to, I think, the last time this year, with the exception of December, when they have the opportunity to have a full press conference in addition to just the release of minutes, a statement. Buyer beware. We might have one big pullback yet again, but given where gold has been trading, I would doubt it would be more than $30, $40 below where we are now at $13.67 and change as the close for today. And The 50-day moving average on gold is now at 13.18 and 64 cents on a closing basis for spot. And I don't think they're going to be able to get it below that. And that will probably trend upward to some extent as we bounce back a little bit after this pretty severe whacking we've had this week as well. So tomorrow probably is going to be counter to a lot of the fears of people who follow Fed, the unemployment report and its release. I have a feeling tomorrow will actually be a reasonably positive day, which will surprise some folks. Part of the reason why I say that as well, too, is that we've had some unusual action in the equities again, where today we saw over 6 million shares of GDX being sold in almost capitulation style. It's not quite as a big blow-off as normally people would look at it and say, oh, yeah, that's capitulation selling. But it's darn close. And the radio listeners, go to our page and you'll see it. We're going to put a chart in there. You can see what I'm speaking about relative to the last week or so.
Just getting back a little bit here to the FOMC statement coming out, the big September one here on the 18th, which is kind of been on the back burner a little bit with all the news on Syria. What I'm anticipating, and I think Eric for the most part is in agreement with me here, the Fed is fairly likely, I would put it in above 90%, probably 90 or 95% for all our readers and listeners who follow all the propaganda and the mope that the Fed spews and puts out before major policy changes. They've been giving all the signs that they're ready to announce a taper. We had Obama today on Thursday telling the G20 that stimulus will be withdrawn gradually. As Eric mentioned, the Jackson Hole speech as well. Bernanke wasn't present, and none of the other big Fed guys were present. All of those speeches, as well as the other recent MOPE and Fed Speak reports, they've all been indicating that taper is coming. Now, obviously the asterisk we can put on that is any attack of Syria, but outside of that, what we're looking for is a nominal taper, probably somewhere in the range of 10 to possibly 15 billion. Really what we're looking at here is the potential, as Eric mentioned, for one last big smash in the metals, as the market's knee-jerk reaction is taper's ending, because the Fed has been claiming they're going to stop QE entirely by next June, and we don't believe that's going to happen. As Eric first pointed out, I think 4 or 5 months ago, that the Fed was likely to taper in September, but they're going to have to, it was going to blow up on them so bad that within the next 3 to 6 months later, they're going to have to increase the size of QE. So if that does materialize, if the Fed does taper in a couple weeks here on September 18th, we could be looking at one of the last big buying opportunities for the metals, and the smart money is going to be buying that because they're going to realize that it's not sustainable. The QE is not going to be able to end by mid-2014, and just as Bernanke admitted I think it was his last press conference or 1 or 2 press conferences ago, that the economy would tank if they stopped QE right now. On a long-term outlook or perspective, QE is not going anywhere and probably will have to increase, especially with tonight on the 4th, the 10-year rate has hit 3%. Bonds are skyrocketing, and I would anticipate them to continue rising if and when even a marginal taper is announced. They're kind of backing themselves into a corner here, Eric.
Yeah, and we should also point out, too, that some of the selling this week is partly carry-on, copycat selling after the cartel had painted the tape and then the speculators followed through. But the justification that the speculators are making is that, they see the same story about tapering as a probability as well. And when we say, the last big dumb move with tapering on our horizon, we should define that. And again, I don't see us going much below the 50-day moving average on gold being, by the time that rolls around, maybe 13.20 or something on that order. And then, when it comes to silver, the $22.50 area, give or take, is probably going to hold as well, too. Maybe 22, give or take. So, all things considered, halfway decline from the peak of $25.20 some odd cents on an intraday basis that we saw last week to a correction in the very low 22 area is not a huge move, but people will be very fearful about it because of the background of tapering and the prospects of the dollar rising and on and on. But we have the fiscal situation as well too that we've spoken about in the last show on the horizon, and international bond buyers curtailing their purchases along with domestic bond purchases declining. So the Fed has to be the buyer of last resort. They are not allowed to leave that position lest the entire banking sector finds itself in an illiquid position. And the Fed's biggest job above everything else is protecting the banks because it's owned by the banks.
Exactly. And really this whole was turned into a fiasco or a circus with the congressional debate now about the Syria attack is only going to push the looming fiscal crisis back further as far as it's occupying Congress's time. They're only going to have a few weeks once they get past the everything with Syria here to debate raising the debt limit, and we're both pretty much in agreement that it's going to happen, but the markets are going to react with that when we have a situation where this isn't just the statutory debt limit, this is where all the pilfered funds have already been raided and they're out of cash.
Yeah, they can't play as many games anymore. I mean, comes a point in time when they really have to raise the limit, period, end of story.
We'll keep an eye on the upcoming FOMC statement here about a week and a half. Thankfully, for most of this week, it looks like attack of Syria is on the back burner, at least for now, while the State Department continues to push for it. There doesn't seem to be a whole lot of support, particularly in Congress and really even in the Senate. I think there's only about 15 or 20 senators who have said they would vote.
And as a political note, too, we should probably throw in, it isn't often that your Congress is responsive to you, the voter, folks. This is one of those rare times where they're actually pretty nervous about where they're standing in the electorate's eye. If you make phone calls and you write letters and send emails now expressing an interest in not going on any military strikes, they're going to be more inclined to listen to you. And I know that there's a lot of cynicism out there because a lot of people say, the elected officials don't give a rat's arse about what we think. Well, right now they're actually paying attention, and you can actually have an impact. So I strongly advise people to voice your opinion. Go to a place like Who's My Representative? You put that in Google, it'll pull up a website where you can go and find out exactly who are your representatives according to your zip code or any other kind of information you'd want to provide. It's pretty easy to do, and even emails are things that they'll be paying attention to this time around.
Right, and Eric's been keeping close tabs on the situation over at the News Doctors with his exclusive content, so you want to keep checking that out daily as well. So for the Doc and Eric Dubin, thanks for tuning in to the ST Weekly Metals and Markets.
The Doc is pleased to announce the launch of thenewsdoctors.com, a new website dedicated to providing 24/7 access to breaking news worldwide, from sources including Zero Hedge, RT News, Silver Doctors, and exclusive articles from the Doc and Eric Dubin. Thenewsdoctors.com, changing the way you view news.
S.D. Boyan.